Bob Walton with Inside919.com and EXP Commercial. Think we're in a housing bubble? Well, after I weigh in on some local trends and stats, I've two experts here that are a little at odds but should hopefully give you the insights you need to make informed decisions with your commercial and residential property needs.
I have to warn you all, the U.S. housing crash has already started, particularly in the cities that I'm going to show you in this video. And the reason why I feel confident in predicting this housing crash and predicting these home price declines is because I developed a model that tells you the fundamental value of how much homes are worth in your city. Because in addition to all the headwinds the housing market's now facing through higher mortgage rates, higher inventory, and a general slowdown coming in the economy, we now have pretty much all the big names in the housing market predicting a decline. Redfin's CEO Glenn Kelman just went on CNBC and says sellers are starting to freak out as the housing market is shifting. Meanwhile, Realtor.com just came out with an article saying that the housing market is showing signs of a correction. And so the thing that you got to understand for the broader U.S. housing market in the cities on this list is that all of that buyer FOMO that occurred over the last 2 years that caused people to overpay for homes, not only is that gone now that's going into reverse, and we're going to start to see home buyers say, wait a minute, Redfin and Realtor.com are saying home prices are going to decline. I'm going to hold off. That's the recipe for a fast housing crash and a big housing crash.
In April, a joint report from the Wall Street Journal and Realtor.com ranks Raleigh as one of the top 10 emerging housing markets for investors and homeowners alike. Raleigh-Durham was also ranked as the #1 largest market for housing construction growth last year as more people moved into the metro area. Given these uncertain economic times, Peter, what do you see coming down the pike? We've got inflation, we've got all kinds of things going on, interest rates going up. Not sure what the job market's going to do down the road, and we may have a bubble in the market. What do you see as the future for foreclosures, and how is that going to impact your business?
Well, I mean, we have not had any foreclosure in the last 3 years, so in that aspect, it can only go up, and we're going to see more foreclosures. However, the banks, the hedge funds, and most of the foreclosures are owned by hedge funds nowadays. The banks tend to sell their distressed properties in bulk to the hedge funds. We're going to see probably a more normal market. I don't think we're going to see a rush of foreclosures. The market, at least here in central North Carolina, has been pretty strong and demand has been strong. I don't see that changing.
Raleigh is listed by WalletHub as one of the best cities for renters in the U.S. based on key metrics such as share of renters and rental vacancy, rent-to-price ratio, and historical renter price changes. Nearly 50% of the households in Raleigh are occupied by renters, with rents growing at 13% year over year.
And this is the telltale sign of a bubble that pretty much every city on this list meets, is when the home prices in a market surge up way faster than the rents. Well, that means it's going to be increasingly more affordable to rent in the market versus buy, so buyers are going to drop out. Just as many investors also drop out because the rental yields are going to go down.
The job market stays as strong as it is here in the Raleigh-Durham area. I don't see prices coming down, but I do see them slowing down and not having increases of 20%, but more 2, 3, 4% appreciation a year.
Good. Raleigh is forecast to gain over 9,700 net new jobs per year between now and 2028, boasting an annual job growth rate of 0.9%. According to the North Carolina Department of Commerce, Raleigh, along with Charlotte and Wilmington, are projected to show the fastest job growth rates across all industries over the next 6 years. In fact, Raleigh is ranked as one of the best metro areas for STEM. That's science, technology, education, and mathematics.
Rates. I mean, we're at 5% now. We're probably going to be around 6%. But again, that is probably a more normal market. and should not be unhealthy.
And the thing that you got to understand about Raleigh is that while a lot of people are moving there, not nearly enough people are moving there to justify today's prices. For instance, take a look at home values in Raleigh over the last 25 years. You can see from 1996 all the way up to 2020, 2019, home value appreciation in Raleigh was very low, it was very steady, and then all of a sudden, bam, we had massive appreciation well above this long-term trend. That's a sign that Raleigh's housing market is tremendously overvalued and that we're going to have a big decline.
We're going to see a slowdown, I think, in where we had 10, 20 people looking at one house. That will slow down. Interest rates will keep some people out of the market. The rent rates have increased tremendously, and I do think we're going to see a change in that. They're probably going to slow down a little, and they might actually come down because customers will demand that they just cannot afford the rent rates that are currently asked.
Bubble and crash or mild adjustment? We all have our opinions. I suspect we'll be seeing some correction in the next 3 to 6 months, but as we saw in 2008, the hardest hit areas were outside the Triangle region. Have thoughts or opinions? Please post them down below in the comments section.